All right, so we're back with another deep dive. This time,
Let's do it.
we're looking at Carnival Corporation.
Two ships away,
Yeah, their first quarter 2025 earnings call just dropped.
hot off the press.
And we're going to unpack it all right here so you don't have to wade through those like super long transcripts.
Yeah, they're dense.
Yeah, so let's just get right into it. What stood out to you from like the top level overview of these results?
Well, first of all, Carnival had a really, really strong first quarter. They exceeded expectations pretty much across the board.
Nice.
They reported record revenue, EBITDA, operating income, customer deposits
Wow.
for a first quarter.
All first quarter record.
All first quarter records, yeah. And their net income also blew past their guidance.
Although really good news for them coming out of the gate in 2025.
Yeah, definitely a good start to the year.
Now, when we say record revenue, what exactly drove that? Was it just like more people cruising, or is there more to it?
It's a bit of both, actually. I mean, their yields were up significantly, 7.3%, which is huge.
Yeah.
And that beat their guidance. And it builds on like the strength they saw last year, too.
Okay.
Both ticket prices and onboard spending contributed to that growth, which is a really good sign.
Yeah, so they're not just filling the ships, they're also getting people to spend more once they're on board.
Exactly. Yeah, it seems like that demand is really strong across the board.
Got it. And what about the cost side of things? How did they manage expenses?
Well, their unit costs were better than expected,
Okay.
mainly because of the timing of some expenses, but that all contributed to their near doubling of their operating income.
Wow.
And they hit an EBITDA of $1.2 billion,
Nice.
which is a big jump from last year.
Huge.
Yeah.
So overall, it sounds like they're in a really solid position financially.
Absolutely. Their margins are looking good.
Okay.
Both operating and EBITDA margins are up significantly year over year.
Okay.
And they're actually even better than they were back in 2019.
Wow, so they've bounced back strong from the pandemic.
Yeah, for sure. I mean, they're not just back to normal. They're actually exceeding their pre-pandemic levels in some areas.
That's impressive, and it sounds like they're feeling pretty optimistic about the rest of the year, too.
They are. They actually raised their full-year yield guidance by 0.5 point to 4.7%.
Wow.
Which is pretty impressive considering all the like economic and geopolitical uncertainty that's going on.
Yeah, for sure.
And their earnings guidance for the full year has been increased by $185 million.
Wow.
So they're definitely expecting another strong year with a lot of bottom line improvement.
So what's driving this confidence? Are they just like riding the wave of the current demand, or are there some specific things that are making them optimistic?
Well, the strong first quarter results definitely help, but they've also been doing a lot to improve their financial structure, like their recent refinancing efforts
Right.
are projected to add about $100 million to their bottom line this year alone, just from lower interest expenses.
Gotcha. So they're not just relying on the market, they're also making smart moves to strengthen their position.
Yeah, exactly.
And it seems like they're hitting some of their longer-term goals ahead of schedule, too.
Yeah, that's right. They're now expecting to reach their 2026 SC change financial targets a whole year early.
Wow.
So that includes a 12% ROIC and over 50% higher EBITDA per ALBD than 2 years prior.
Okay.
And they're also on track to meet their 2026 greenhouse gas reduction target.
Wow, so they're making progress on the sustainability front, too.
Yeah, it seems like they're really committed to that.
Now, all this sounds great, but what about the future? I mean, are people still booking cruises?
Oh yeah, demand is still very strong.
Okay.
Booking volumes for 2026 and beyond reached an all-time high during the first quarter.
Wow.
And bookings for the rest of 2025 are also at record high prices across all their core programs and quarters.
So people are not only booking cruises, they're also willing to pay more for them.
Yeah, exactly.
Interesting. So it seems like they're firing on all cylinders right now.
For sure.
But let's dig a little deeper into some of the details that drove these results. You mentioned earlier that their yields were up significantly in the first quarter. Can you elaborate on what factors contributed to that?
Sure. So the 7.3% yield increase was driven by a combination of higher ticket prices and increased onboard spending.
Okay.
And this was across both the Atlantic and European markets.
Got it. So both sides of the pond are contributing to this growth.
Exactly. And what's particularly interesting is that the growth in onboard spending actually accelerated from the previous quarter, with all categories showing pretty significant increases.
Okay, so people aren't just cruising, they're really indulging in the onboard experience.
Yeah, it seems like it.
Now, you also touched on the fact that the European brands are performing exceptionally well. Can you tell us a bit more about that?
Yeah, their European brands continued their strong year-over-year performance, both in terms of price and occupancy.
Okay.
And they actually outperformed the North American brands in terms of the degree of outperformance.
So Europe is really leading the way for them.
Yeah, it seems like the European cruise market is particularly strong right now.
Interesting. Now, switching gear to costs, we talked about how their unit costs were better than expected in the first quarter. Was this just due to timing, or were there some underlying efficiency improvements as well?
Well, their cruise costs without fuel per ALBD increased by only 1% year over year,
Okay.
which was better than they had anticipated.
Right.
And while some of that was due to the timing of expenses, they also identified some permanent cost savings,
Okay.
which should benefit them for the full year.
So a combination of short-term and long-term improvements.
Exactly.
But I know we saw that their full-year cruise cost guidance was adjusted a bit. What was that about?
Yeah, so despite those permanent savings, their full-year cruise cost guidance is now a bit higher than they initially thought.
Okay.
This is mainly because of some higher dry dock costs from some unplanned events and also some charter hire costs associated with the ship sale.
So a few unexpected bumps in the road.
Yeah, but it's worth noting that the charter hire costs are partially offset by lower depreciation expenses.
Okay, so it's not all bad news.
Right.
Now let's shift our focus to their financial management. I know they've been working on their debt quite a bit.
Yeah, they have.
What can you tell us about their progress there?
Well, they did a lot of refinancing in the first quarter, which led to lower interest expense.
Okay.
They refinanced $5.5 billion of debt, which is about 20% of their total debt.
Okay.
And that included some high coupon instruments. So
Right.
that's going to result in some significant annualized interest expense savings.
So they're proactively managing their debt and it's paying off.
Yeah, their average cash interest rate is much lower now, and they've
Okay.
reduced their secured and senior priority guaranteed debt considerably over the past year.
So they're deleveraging and improving their credit profile.
Yeah, they're in a much better position now.
And it sounds like they have a plan to continue this trend.
They do. They plan to do more refinancing and debt reduction throughout the rest of 2025 and into 2026.
Okay.
And they could potentially reduce their debt by almost another $5 billion over that period.
Wow, that's a significant amount.
Yeah, and they're anticipating achieving investment-grade leverage metrics in the near term, which would be a huge plus.
Yeah, that would definitely give them more financial flexibility, right? So they're crushing it financially. But what about their strategic initiatives? What are some of the key things they're focusing on?
Well, they talked a lot about their marketing efforts during wave season.
Okay.
You know, that peak booking period.
Right.
They really focused on broadening consideration for cruise travel.
Got it.
So there were some cool campaigns like Costa's presence at the Sanremo Music Festival in Italy, and Carnival Cruise Line had promotions tied to the Oscars and then their new destination Celebration Key.
Oh, yeah, Celebration Key. That's their big new private island in the Bahamas, right?
Exactly. It's set to open in July
Okay.
with a ramp-up plan going into the fourth quarter.
That's exciting. And what about some of their other projects? How are those coming along?
Well, the development of their Relax Away at Half Moon Cay is going well. That's expected to launch in the second half of 2026.
Okay.
And they're also expanding and renovating their Denali Lodge in Alaska to make their land sea packages even better.
Interesting. So they're investing in both their onboard and onshore experiences.
Yeah, they're trying to create a more holistic and appealing vacation package.
Makes sense. And are there any updates on their ADA Evolution program?
Yeah, that's still underway. They're continuing to upgrade their ships.
Okay, so they're not neglecting their existing fleet while they're developing new destinations.
Right, they're trying to keep everything fresh and up to date.
Now, we also saw that they made some changes to their brand portfolio. Can you tell us a bit more about that?
Yeah, they decided to fold the P&O Cruises Australia brand into Carnival Cruise Line.
Okay.
And they also sold Seabourn Sojourn, which was part of their Seabourn fleet.
And why did they make those moves?
Well, they said that the Seabourn Sojourn sale was in response to an unsolicited offer that they thought was in the best interest of their shareholders.
Okay, so a strategic decision to capitalize on a good opportunity.
Yeah, and the remaining Seabourn fleet is pretty modern with a low average age, so they're still in a good position in the luxury cruise market.
Got it. So they're streamlining their portfolio and focusing on their core strengths.
Exactly.
Now let's circle back to their guidance and outlook. We talked about how optimistic they seem about the rest of the year, but can you give us a bit more detail on that?
Sure. So their full-year net income guidance has been raised, and they now expect their EBITDA for the year to improve by almost 10% compared to 2024.
Okay.
This is mainly due to the strong same-store revenue growth they're anticipating.
So they're banking on continued strong demand.
Yeah, and even though there's a lot of global volatility, they're still pretty confident in achieving their updated guidance.
That's good to hear.
They have a really strong booking position, and they're not expecting much capacity growth in 2025 and limited growth in the following years.
So they're in a good position to manage supply and demand.
Exactly.
Now, finally, I'm curious to hear what they had to say about the consumer. How are people feeling about spending money on travel in this current economic climate?
Well, they emphasized the resilience of the consumer and how cruises offer a really good value proposition compared to a lot of land-based vacations.
Yeah, that makes sense, especially when people are being more careful with their spending.
Exactly, and they've seen a big increase in new-to-cruise guests.
Okay,
So that suggests that cruising is attracting a wider audience.
interesting. And did they notice any differences in booking trends or onboard spending across their different brands or cabin categories?
Not really. They said that for 2026 bookings so far, there haven't been any material differences,
Okay,
and their cancellation rates are still consistent.
so no red flags there.
Nope.
And what about close-in bookings for the second quarter?
Those are looking strong both in terms of volume and pricing.
So it seems like the momentum is continuing.
Yeah, for sure.
All right, so wrapping up this deep dive on Carnival's first quarter earnings, we've seen some really impressive results. Strong revenue growth, solid cost management, and a positive outlook for the rest of the year.
Yeah, they're definitely firing on all cylinders.
They're managing their debt, strategically investing in their future, and they seem to be resonating with consumers.
And that strong booking position and limited capacity growth are really encouraging signs for the future.
For sure. Now, before we wrap up, I always like to get your take on some outrageous but plausible trade ideas based on these results.
Oh, I love these.
Of course, this is not financial advice.
Of course not.
But let's have some fun. So what's one crazy but maybe not so crazy idea that came to mind?
Okay, so given Carnival's strong yield growth, their improving financials, and the limited capacity growth in the near term, but also considering the broader travel sector's sensitivity to economic news.
Okay.
How about a pairs trade?
Okay, I'm listening.
You go long Carnival Corp,
CCL.
CCL, that's right,
Okay.
and you short a basket of airline stocks
Interesting.
that have recently expressed concerns about domestic leisure travel demand.
Okay.
The idea here is that cruise demand seems to be more resilient, maybe because people are looking for more value-driven vacation experiences,
Right.
while certain parts of air travel might be struggling.
Okay.
So this trade could capitalize on that relative strength within the travel sector.
So you're betting on cruises over flights in the short term.
Essentially, yeah.
Interesting. Okay, I like it. Now give me another one.
Okay, so another outrageous but plausible idea.
Hit me.
With Celebration Key opening soon,
Okay.
and Carnival expecting a big jump in Caribbean guest numbers because of it.
Yeah.
How about going long on companies that benefit directly from increased tourism to the Bahamas?
Okay.
Like maybe local transportation providers or excursion operators,
Right.
if they're publicly traded or you can find them through some kind of index.
Got it.
This will be a longer-term play, of course.
Yeah.
And it depends on Celebration Key being successful and attracting a lot more cruise passengers to the region.
So it's a bet on the ripple effect of this new destination.
Yeah, exactly.
Okay, I like that one too. Some food for thought for our listeners out there.
Absolutely.
So to sum it all up, Carnival had a fantastic first quarter. They're looking strong for the future, and there might even be some interesting investment opportunities to consider.
Yeah, definitely a company to keep an eye on.
For sure. All right, everyone, thanks for joining us for this deep dive on Carnival Corporation's latest earnings. Remember, do your own research before making any investment decisions, and we'll catch you next time for another in-depth exploration.
See you then.
Bye.
Bye.